Hello, it's time for Fastpartner, the third and last real estate company to present today. I'll leave the word over to the Deputy CEO, Johansson. Christopher, the word is yours.
Thank you. Very much welcome to this presentation of Fastpartner. I'm Vice President at Fastpartner. If you would like to dig deeper into what you hear in the presentation today, please visit our website, fastpartner.se, where you can download our quarterly and annual reports. The beautiful photograph you see here is from the cover of our annual report and was taken from the roof of one of our properties in Solna. This building is part of a concentrated cluster of more than 100,000 square meters that we own in Solna. Next slide, please. For a long time, Fastpartner has worked to deliver the best risk-adjusted cash flow of any property management company listed on the exchange. Now we're taking the next step in this work. Moody's has rated us investment grade. In conjunction with that, we have issued an unsecured green bond for 1.25 billion for 4 years with a net interest margin of 112 basis points. Today, we have an average interest rate of 1.8% on our loan portfolio, which is worth 14.6 billion. So each basis point reduction of our average interest rate equals 1.5 million in profit from property management. And if we were to refinance our entire portfolio on the terms of the green bond, annual property management profit would increase by more than 100 million. So that's a big deal, and it will radically improve our financials in the future. But it doesn't stop there. The investment grade rating also radically lowers our refinancing risk. Next slide, please. Fastpartner has been publicly traded for more than 25 years and is on Nasdaq's large cap list. We own 208 properties with an aggregated area of about 1.5 million square meters. The value of these properties is about 31 billion, and the aggregate rental value is about 2 billion per year. Our property portfolio is mainly concentrated in Stockholm, but we have a significant presence in Sweden's 4 biggest cities and also Gävle and Norrköping. Having our property portfolio concentrated in major cities gives us multiple advantages. It makes property management efficient, and we do our business where the economy is growing, which also allows us to increase rents. This provides risk diversification while creating superb opportunities for finding growth through prime acquisitions. Next slide, please. As I said, we have a mixed-use portfolio with all kinds of properties. This graph shows how our rental value is divided among different categories. Right now, the fastest growing category is residential, where we recently completed about 200 flats in Märsta. Another steadily growing segment is our share of public service properties, schools and care facilities. This proportion will expand as we refurbish vacant premises and build new properties for this type of use. Our project pipeline also contains, in addition to residential and public services properties, a significant number of development rights for light industry and logistics focused on last mile. Next slide, please. To safeguard our cash flow, it's important to look after our tenants in the best way possible. We have our own property management personnel who interact with tenants daily and can identify their wishes and needs. This means we are close to our customers, and that's important because 50% of new rentals are generated through our existing tenants. Next slide, please. Clear, committed, connected are our watchwords. Being a tenant with Fastpartner should be straightforward and effortless. The tenant should feel assured that with us they are getting a best-in-class product in terms of economic efficiency and also sustainability in every aspect. Next slide, please. Our customers appreciate the work we do, which we see in customer satisfaction surveys, where we continually improving our position year after year. That is one result of employees who are satisfied with their jobs and who find the work they do stimulating. Last year, we were certified by Great Place to Work, one of the biggest and most widely recognized employee surveys. In this context, let me take the opportunity to also mention that we are a major sponsor of Fryshuset, a non-profit organization for youth. They do fantastic work with young people, especially during school holidays. Next slide, please. Now that I briefly presented our operations, I would like to update you on our current performance. We achieved our previously established target of 950 million in rolling profit from property management by a comfortable margin, and actually ended the year with management profits of 952 million. Looking forward, we are now currently delivering 990 million in rolling profit from property management. Last year, we achieved an impressive surplus ratio of 71.3%. All in all, last year was yet another good year for Fastpartner, and dividend was raised to an even 2 per Class A ordinary share. Last quarter, the average interest rate was 1.8%, and our interest coverage ratio increased and is now 4.2. Our loan to value decreased to 43.7%, and net asset value increased to 92.9 for each Class A ordinary share. Before moving on to tell you about our new targets for 2025, I'm going to briefly look back on the past year. What a year. First, everything was running smoothly. The economy was growing. Then a short article about the new coronavirus in China. Shouldn't be that awful, just a new variant of a cold virus. But then total shutdown about a year ago. At Fastpartner, we called the management team to a digital meeting and made sure we could look after our employees and tenants. Then we tried to get a clear picture of our revenues and tight rein on costs. Last year turned out well for us, and the increase in the surplus ratio is partly thanks to better cost control. For me, it feels very reassuring that we have such a firm grip on costs. Next slide, please. Here are our business targets for 2025, which the board adopted on 7th of September 2020. The most important target by far is that we will continue to grow our profit from property management by about 10% each year. And by the close of 2025, we will have reached a rolling profit from property management of 1.5 billion annually. We say that we're going to be climate neutral in our operations by 2030, but I think it can happen even earlier. We have actually already reached several of these targets, for example, achieving an investment grade rating and markedly reducing our CO2 emissions. So to recap the targets for 2025, they are all based on sustainability and long-term stable growth. Next slide, please. If you use a simple model to extrapolate the impact of reaching the 2025 targets, you'll see Fastpartner owning properties worth of about 40 to 45 billion. For that, we're expecting to reinvest about 2/3 of the profit from property management each year. We're expecting rental income to increase as indexed in agreements, but we're not counting on any major changes in valuation yields. We have included the effect of an investment grade rating. Looking at our past performance, you'll see convincing evidence that we will be able to meet these targets. In 5 years, the annual growth of rental income has been about 10%, property values 15%, long-term net asset value 21%, and share price 12%. Looking at the 10-year period, the figures are even more impressive. Next slide, please. Of course, growth will not be continuous the way the model indicates, but will advance in stops and starts. This graph shows our history of acquisitions and investments, as well as how these two together have boosted our profit from property management. We have an opportunistic acquisition and investment strategy by which we evaluate acquisition opportunities when they emerge. If we do not find the long-term return we're looking for in an acquisition, we turn to our portfolio development rights. Next slide, please. One effect of continuously investing in and developing our properties is that we lift the level of rents, as this graph shows. This is a process of refinement aimed at achieving prime properties with better offerings, as well as better property portfolio concentrated in Sweden's fastest growing regions. The latter goal in particular is something not reflected in the external property valuations we do twice a year. In my word, it's a good argument for a share price that should include a premium on the net asset value of 92.9. Next slide, please. As I said at the start, we are very skilled at generating strong cash flow. That is clear from this graph. Here you can see how Fastpartner steadily and evenly delivers higher cash flow than the MCI property index on average. And why is that important? Next slide, please. We recently won a prize for being a mixed-use portfolio in the MCI property index that had the highest average total yield for 3 years straight. If you look at the total yield on properties shown in this graph of the total number of properties in the MCI index, that yield derives partly from changes in valuations and investments and partly from current cash flow. What is obvious here is that the first component varies greatly over time, while cash flow remains reasonably stable year to year. If a company outperforms in terms of cash flow year after year, like we do, it leads to a compounding effect, making the company a winner over time. Next slide, please. So currently we are putting in a lot of work to develop our office offering. We think that we will see a high demand for top quality office premises this autumn. The ideal offering will be a multi-tenant property where tenants can expand or reduce their hiring. They should be conveniently accessible by public transport and by car, include all sorts of services, restaurants, gyms, shared conference facilities, spontaneous meeting, etc. So COVID will make everyone think hard about whether they have the right office. As I said, this is our current focus and work is underway on several sites, including Kista, Hemsta Works, Gävle, Liljeholmen, and especially in central Frösunda, Solna, which this next video will show. So can you please put on the video? Thank you. Sustainability work is central to us in everything we do. Each year, we reduce our CO2 emissions significantly, and most recently, we reduced them by about 40% for an equivalent space. By 2030, we aim to be completely carbon neutral in our property management. We are increasing the number of environmentally certified properties, and today more than 30% of our properties by value are certified. In addition, we also finance these properties with green financing. The current share with green financing is just short of 30%. Sustainability has more dimensions than just carbon dioxide emissions, though emissions are very important. Something we are very proud of in our property management operations is how we get involved in communities and make efforts to support small businesses where we own properties. For many of these small businesses, we are honored to provide them with increasingly larger premises. Each year, we offer traineeships, and many are located in our urban centers. We also have many employees who live where we own properties. Reusing vacant premises and repurposing them are two of the most climate-smart things we can do, considering about 60% of a property's emissions during a life cycle of 50 years comes from the construction phase. Next slide, please. Here we have a quick look at the company's sustainability targets. Next slide, please. Fast Office, that is our co-working hub offering. And here we see a very strong demand at the moment. In Fast Office, we are trying out new ideas in property management and testing innovations in our offering to customers, such as having access to geographically expanded rental space. Fast Office is also a gateway for new graduates to our property management services. Next slide, please. Nowadays, the business world is brimming with great efficiency through digitalization. So it is with the property sector too. We see digitalization as a key to achieving a surplus ratio of 75%, but it's also playing a central role in achieving our environmental goals and targets for customer satisfaction. At Fastpartner, we have a completely digitalized customer journey. So it starts with the marketing, measuring results, targeting advertising. Then we have digital signed lease agreements, electronic invoices, digital signage and digital keys, notice boards, and it continues over into the property management where we can boost quality, increase our availability to customers. So it's great, much efficient. Next slide. We have a large portfolio of development rights, including both residential and commercial. The portfolio is totaling 300,000 square meters. This allows us to find growth in other ways than by means of acquisitions. Next slide, please. The two biggest development rights projects that we are working intensely on right now are in Västberga and Bromma. In Västberga, we are developing almost 40,000 square meters of commercial space. In Bromma, we are working with a detailed development plan that will consist of a mix of residential and commercial space totaling about 70,000 square meters. We hope this detailed development plan will be ready in 2023. Next slide, please. In Gävle, we are working on an interesting project in Gavlehov that will allow us to build 35,000 square meters of mixed-use properties. Okay, next slide, please. So many thanks to everyone who has listened. And in summary, I'll say that when you invest in Fastpartner, you invest in a winning team with employees who are deeply committed, knowledgeable, and proud of what they do. If you want to keep up to date on the work we are doing, I recommend you to follow us on LinkedIn. Thank you.
Great, Christopher, thank you for your presentation. I'll run a few questions here from my side. Well, let's just quick on the development. You mentioned it in the end here, but You have now, total investments in development properties at 1 billion SEK, and that's roughly similar to what was in Q4 and Q3, but much more than just in Q4 2018, and before that it was just half and less. So should we expect your development portfolio to shrink, remain or grow from these levels?
So when we purchase properties, we always look out for the potential of finding building rights. So, but they are also key to our coming expansion of business. So we will, as we see fit, make use of these development rights.
And just in terms of yields, what kind of yields on average do you expect for your development portfolio, both the resis and commercials?
Yeah, of course, I can't give you a particular number, but of course the yields on the development projects we engage in are much higher than the ones you find when you do acquisitions, of course.
And could you indicate, if we're talking around 6% for the commercial portfolio on average, or is it way off?
I could say at least more than 50% higher than acquisitions, the yield on developments. And for us, many times these development rights, as I said, that we have them for free, so we haven't purchased them. We find them in our existing portfolio of properties.
And the latest two acquisitions and the acquisitions this year were in Gävle. Could you explain a bit on your rationale for developing or for expanding in Gävle?
So we have 6 core cities that we are looking into when we do acquisitions. In each of these cities, we know the local market and many of the tenants. And these are, of course, Stockholm, Gothenburg, Malmö, Uppsala, and then Norrköping and Gävle. So for us, it's very natural to acquire properties in any of these 6 cities.
And could you say anything on the yield level in Gävle?
Of course, it's more attractive than in Stockholm.
Has the pandemic changed your view on any segments or geographies, both that you're actively owning now and that you could consider to expand into?
So we're very confident that if you have a good offering in offices, you will be very competitive in the coming autumn here, and you will even be able to increase your market share, we think. But then the COVID, it has made logistic properties extremely expensive. That's one thing for sure.
Christopher, time has run out, but great to have you on, and thank you for presenting today.
Yeah, thank you for having me. Thanks. Bye.